Good morning. Welcome to Stock Market Today, Thursday, January 7th, 2020. This is your host, Dan Russo, the Chief Market Strategist at Chaikin Analytics. Find me on Twitter at DanRusso_CMT. Stock Market Today brought to you today and every day by Chaikin Analytics. Head over to chaikinanalytics.com/today. Sign up for a free email where we get a lot of the content for this show, give you daily stock ideas to consider. It hits your inbox every trading day before the market opens. So U.S. equities were mostly higher on Wednesday, though well off the best levels of the day. The Qs, the NASDAQ actually finished lower on the day. Value and cyclicals rallied while growth and momentum sold off following the elections in Georgia. Treasuries weakened with the curve steepening sharply. The dollar was stronger against the yen, weaker against the euro. Gold finished down 2.3%, breaking a 5-day winning streak. WTI crude settled up 1.4% following a larger than expected U.S. inventory draw. Now, as we get to the desk this morning, S&P futures are up 50 basis points after Asian markets were mostly higher overnight. Europe is trading mixed here this morning. Treasuries are mixed with the curve continuing to steepen. The 10-year yield actually closed over 1% for the first time since March yesterday. Dollar is seeing good gains against both the yen and the euro. Gold is up 20 basis points. WTI crude is up 70 basis points to kick us off on a Thursday morning. Where, we can only honestly say yesterday rotation was the word of the day. Look at the bottom of this chart here. Look at the small cap shining once again. IWM trading over 200. Thought there might have been some near-term potential for a pause there, and maybe there still is, but we solidly broke through it yesterday. For the S&P, not a ton has changed here as we continue in the uptrend off the March lows. Support at 360 in the near term, more important 340 longer term. Below 320, you have to start to change your view, I think. Above 340, we continue to believe there's upside potential to 413. Now for the Qs, 260 is key. 300 is important in the near term. We've talked about this a lot. 300 is the level to hold to arguably say that this is not a false breakout. And ideally, we want to see 300 hold. If not, we're looking at 280 and then below 260. The structure of the uptrend has changed. So that's the roadmap, and it's no different than it has been. I wish I had something to say. But as always, the shifts and the changes that take place under the surface of these major indices are what I think is really important and where the opportunities lie. We're going to talk about a few of those here today. But big picture, looking at the major averages, not a ton has changed. Rotation still a theme. Broadening breadth still a theme. We'll take a look at that a little bit later on in the show as well. Hitting the market in a minute. What am I writing about in my note today? Note that you can get if you take the 14-day trial. Value and cyclicals lead in a day of rotation. I mean, just, a lot of moving parts to the rotation, but I think broadly, the standout was certainly the banks with the curve steepening. High beta trades to new highs, continues to lead the broader tape. Breadth metrics remain strong. Micro caps reach a record, and that's important as we kind of drill down here on what's happening from a breadth perspective. Global stocks break their 2018 high, so another bullish data point for equities as an asset class. And as I said, futures point to a higher open here today. Now, for the major indices from a power bar perspective, some strengthening on the day yesterday. Dow adds 1.4%, 5 to 2 bulls to bears. S&P up 0.5%, 131 to 51 bulls to bears there. NASDAQ down on the day, under pressure. 1813 bulls to bears. Small caps, massive outperformance on the heels of those election results out of Georgia. 840 to 122 bulls to bears for the small caps, which continue to be leadership. Bonds down ticked. Big move in the curve, which helped financials. Financials up 4.4% yesterday. Banks, strong day. Brokers, names like Morgan and Goldman Sachs, huge days yesterday as well. 41 to 4 bulls to bears for the financials. According to the Chaikin Power Bar, small cap stocks and large cap stocks are strongly bullish. It's taking a look now at our stocks of the day, continuing with this trend, if you will. On Tuesdays, we look at a bullish screen. On Thursdays, we'll look at a bearish screen. And this is one that's just kind of names to avoid, potentially set up bearish opportunities if that's how you trade. Looking basically for names in the Russell 3000 that are overbought with weak money flow and a 1-month low in persistency of relative strength. So weak and getting weaker, under distribution. Generally speaking, not the best ratings. in our model here at Chaikin Analytics. So as I ran the screen this morning, 17 names hit the list. You can take a look at this. If you own any of them, maybe you want to think about why you own them. If you're looking for some bearish opportunities, if you do trade that way, there may be some opportunities there, and not signaling out Crown Castle, but using it more as an example in this chart here. This is kind of what that looks like. The way we view the world at Chaikin Analytics. If you take a drill down on one of the names on these screens, CCI here, you can see it as a bearish rating. The trend is weak as it trades below the trend line. Industry is weak. Equity REITs, we know, are a weak group. But take a look at the setup, right? Oversold, bearish money flow, and the intensity of that money flow getting worse, and just kind of continuing to underperform the market, right? So if we think about names that we look at for bullish opportunities and what that setup looks like, kind of flip that on its head to come up with the names that we want to avoid or potentially look for bearish opportunities. CCI is an example of that. And if you drill down on any of your charts, or if you use the charts inside of Chaikin Analytics, this is kind of what it looks like. Name that's under distribution, under pressure, underperforming the market. A lot of unders under there, but you get the point. So an interesting screen that I wanted to call out. It's in the note today, as well as featured here on our show. Let's hit the sector tracker now. Movement of the major sectors last 5 days. Energy at the top of the list. It's kind of an emerging theme that we've been talking about for the past month and a half or so. Materials, obviously one of the cyclical areas of the market that we liked. Financials, been chirping about that for a while now. Banks getting in gear, but it's not just the banks. I mean, capital market stocks are strong. Insurance stocks are strong. So you're seeing some good breadth within the financial sector. Healthcare getting in gear a little bit, and services names strong on the heels of that election. Utilities, industrials, and discretionary are higher and middle of the road. Staples, comms, tech, and REITs are lower and towards the bottom of the list. Tech was under pressure yesterday. There was no two ways about it. Largely speaking, it was mostly the bigger cap names, as it has been, and that's largely been a function of the rotation. It's not so much that it's been out of tech, right? Because if you look at tech on an equal weight basis, it's still strong. If you look at, say, small cap tech, that is still strong. It's really the mega cap names that have been a source of funds for the past few months. Let's hit our industry now. Our industry in focus is home builder services. And this is an interesting one because I think it's at an inflection point. Been an outperformer over the past 6 months, outperforming the S&P by over 12%. Power bar ratio strong, 3-to-1 bulls to bears there. It's ranked number 14 of 21 subsectors, and it's moved down 4 slots over the past week. Mohawk, MHK, Owens Corning, OC, and Skyline Champion, SKY, are very bullish, and bullish, respectively, as holdings within XHB. Now, the fund clear uptrend, it's been a winner. Coming out of the pandemic lows. Bullish rating, strong trend. Trend line acting as support, and that's why I think we're at somewhat of an inflection point here. Pullbacks to the trend line have been good opportunities in the past. However, this time we are more of an inline performer, actually dipping a little bit into underperformance. Getting close to an oversold condition, money flow mixed to slightly bullish. So this is what I'm talking about. When I say I think we're at an inflection point, this has been one of the leading areas of the market. And if it's going to continue to be leadership, I think it has to get going from here. Ideally, what you'd love to see is a topside move here that coincides with better relative strength to kind of get excited about the group here. So I think it's one to have on the radar screen. It's one that's a lot of people are interested. I know that just from conversations that I've had with people. And I think it makes sense to keep an eye on it, but we really want to see that relative strength improve with a rebound off the rising long-term trend line to have confidence that this group is going to continue to be a leader going forward. Let's take a look at what's trending now. Yesterday's movers and shakers, gainers and losers, CNC election, as well as the Magellan deal, sending that stock higher. The rest of the group, Zion's, H-Band, Key, and Fifth Third, are largely a function of that backup in rates, and in particular, the steepening of the yield curve. Now, H-Band was also added to the best ideas list at Wedbush, so that got a little extra juice there. Fifth Third, FITB, up with rates, and then I noticed this morning it caught an upgrade from Goldman Sachs, so keep an eye on Fifth Third today. Strong day yesterday, and then an upgrade from a major bank today could add some fuel to that fire. But I think largely what you're seeing in the financials is what we've been talking about for a while, and in particular, the banks now that getting the tailwind of that steepening yield curve of rising rates, that's starting to play into the picture as well. Taking a look at the loser side of the board, NVIDIA down nearly 6% as the UK is taking a closer look at their deal for ARM. That put that stock under pressure yesterday. ServiceNow, nothing company specific there, down 4.6%. ARE provided a business update, announced an equity offering, as well as some potential M&A activity. That very bearish stock was down 4.3% yesterday. Etsy, no news, down 4.25%. EFX, Equifax, didn't see anything company specific there to take 4% plus out of that name on the day. Let's do our breath work today. Taking a look at the S&P 500 across multiple time frames. Starting with the longer term picture, the percentage of stocks that are above their 200-day moving average, still solid in here at around the 90% mark. We view anything over 60% as a healthy majority of stocks being in a uptrend for its time frame, and we remain solidly above that point. Now, we had been highlighting some divergences in our work, and it's kind of telling that the market's been able to power through those divergences. Percentage of stocks above their 50-day moving average, so moving to the intermediate term, sitting at around 82% here. Again, solid, healthy majority of stocks in intermediate term uptrends. On the shorter term, not shown here on the slide, but featured in my note, we've seen a rebound in the percentage of stocks above their 20-day moving average, over 70% now. And more interestingly, perhaps more importantly, as a leading indicator, is the fact that the advanced decline line here at the bottom of the page has broken to a new high. Now, throughout over the past few years, the AD line breaking to new highs has tended to be a leading indicator for the S&P 500 itself. So odds are market going to continue higher from an S&P perspective, kind of just another data point in our view as it relates to the trend and its likelihood of persisting here. We remain of our views, the same views we've been talking about, been laying out that roadmap for a while now, and the picture just remains the same, and the data points continue to build up. Now, if we start to think about breadth more broadly, take a look at the ACWX, the ACWI-US, taking for equities as an asset class, a positive data point in that the ACWI-US actually has taken out its 2018 highs now. So getting in gear with its US peers, it's kind of the more the merrier, right? As an asset class, equities remain strong. And if we think about in terms of how breadth is broadening out across groups, high beta tends to be risk on. Now, what's interesting about high beta, SPHB here, is that it breaks topside from a near-term consolidation. It does have a bullish ETF rating at Chaikin Analytics. Momentum confirming with the RSI in bullish ranges, and now on the verge of a breakout on a relative basis. Now, what's interesting here is that if you look within the high beta ETF at its sector exposures, you'll see energy in there, you'll see financials in there towards the top of the list. So those are kind of two of the newer cyclical rotation areas that we're talking about. So again, this broadening out of participation to the upside, this broadening out of leadership into some of the more cyclical areas of the market, you can connect the dots and see the confirmation points a few different ways. So continuing to monitor SPHB in that regard as we continue to do constantly. And then one more kind of to kind of beat it here a little bit, to beat the horse a little bit, micro caps, right? I mean, and the message here is, number one, broadening participation, as well as increasing willingness to take on risk. If you think of microcaps as a more risky area of the market, breaks topside, new all-time highs yesterday above the 200-day moving average, RSI in bullish ranges, and a solid breakout relative to the S&P 500. So the data points from a breadth perspective, from a risk-on perspective, continue to pile up, and we will continue to monitor those for you. That'll wrap us up for a Thursday. Hope everybody has a great day. Head over to ChaikinAnalytics.com/test drive to sign up for that trial. I'll see you tomorrow.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're going to bring you daily content from an incredible collection of technical analysts and financial experts.